Hello and good morning, everybody, and thank you for joining us today. I hope you're all managing to keep warm. Now the temperatures have dramatically dropped outside. If you're anywhere near where I am, it's quite wet as well outside, so you might want to take a brolly. For those of you who are unsure who I am, my name is Matt Lovell. I'm your host for the next hour or so, and also the Business Development Manager at Blackmore Four. We're just waiting for a few people to log in, so hopefully you're all comfortable. Whilst we're waiting for others to join, you may notice that I'm in our offices in Brentwood, Essex. I'm unsure how you're operating at the moment, but if you're anything like me, I'm finding it quite useful to have a change of scenery from my house. So I'm grateful to have the option to be working back in my office for my own sanity more than anything else. Okay, so we've got a few people arriving, which is good. So let's crack on. Today's webinar is titled The Where, How and Why to Invest Today for a Better Tomorrow. I will say at this point, please feel free to turn your cameras off or leave them on if you're happy to be seen, but if you'd prefer to leave it off, that's okay. We are recording this session just in case that helps make up your mind. For those of you who are unsure who Blackmore Four or Fiducia Wealth are, at Blackmore Four, we're a business management consultancy specialising in organisational effectiveness. We help businesses to achieve their intended business outcomes in a deliberate way. Our services include leadership, structures, process and systems, and capabilities and behaviour. Fiducia Wealth Management are a multi-award winning wealth manager with over £170 million worth of assets under management. They specialise in estate and tax planning for businesses and individuals, in addition to managing investments to protect wealth. Now, before we get started and I pass you over to today's presenters, I just want to go over some basic house rules for an interactive webinar in case you haven't been on one before. I'll try not to sound too much like a school teacher, of course, but please do keep your microphone muted throughout the presentations. You may well have specific questions relating to your business or specific to the content on screen. Please try and wait until the Q&A sessions at the end of each presentation, when you can unmute and ask questions directly to the presenter if you wish, unless either presenter is happy to be questioned along the way. I'll leave that decision to them, I think. You are, of course, welcome to post your questions in the chat facility on the screen if that method is preferred. And the last one, feel free to take any notes. However, bear in mind, we will send you copies of each presentation to the emails provided in registering for this event within the next 24 hours. So on to today's agenda. Shortly, we'll be hearing from the founder and managing director of Blackmore Four, Matthew Emerson, who will provide an insight as to where he feels businesses should be investing time and money into right now throughout this period. We'll then have a quick Q&A session where you can ask questions directly to Matthew, of course. This will be followed by a presentation, from Fiducia Wealth's Managing Director, Kearney, who will provide you with an insight on where to be investing right now and how investments have changed through COVID-19, if indeed they have. Once again, this will be followed by a Q&A session where you can ask questions directly to Gordon. So, other than that, I hope you're all sitting comfortably. Let's dive straight into the action and allow me to introduce you all to Matthew Emerson of Blackmore Four. Over to you, Matthew.
Thank you very much. So let me just stick up some slides for us to view. You can let me know if they're not appearing on your screen sometime soon. Thanks, Matt. I'm Matthew Emerson. I'm the other Matt. I'm the founder of Blackmore Four. And as Matt's introduced, we're here today to talk about investment. I think typically at Blackmore Four, we're perhaps not used to talking about investment. I think that's largely a financial term. But I think right here and right now, our focus is typically on leadership and investment and leadership. And today I just wanted to talk more specifically about the leadership needs of your specific business. And I'll walk through kind of our definition of leadership, but I think really wanted to focus more practically on what we think businesses should be doing to invest their time and possibly money in this subject of what we call leadership. I don't need to probably talk too much about the context we're all working in. I think within each industry, within probably each locality, we're all maybe facing different challenges. But from our conversations, I think there is a looming question mark for now as to where we should be investing as businesses, investing our money, possibly financially, investing our time, energy, to try and come through clearly what has been challenging times, but also make sure that we're fit for the future. That might include new markets, new products, different services. Investment in technology, I think, has been seen quite heavily over the last few months, given the need and necessity of technology. And obviously there's been a kind of national investment in training and development and learning new skills. So these are all things that I think we're going to have to consider to what extent we're going to invest. When we talk about investment, we put it in the same context. Refocusing, rethinking what your business priorities are really rest on what are you trying to achieve. And I think, again, probably goes without saying, most businesses we work with are kind of having a reset or refocus around what it is they're really here for, what do they think they can realistically achieve, and in that context, therefore, what makes sense to invest. If you don't know what you're trying to achieve, it goes without saying, investment's probably wasted. So we really anchor this conversation about leadership as an investment conversation, framed in what as a business are you trying to achieve, how will leadership help you get there. A few weeks ago, I think now, we published an article talking through the difference between leadership and management, and in some ways this is kind of semantics, but actually we feel quite passionately that we need to be clear on what leadership is. Often overlaps with management, but our feeling is they're slightly different things. So just bear with me for a minute while I kind of make sure we're focused on the same subject. I think management, as we define it, typically focuses on the here and now, operational aspects of a business, making sure there is some form of predictability and excellence about what is being administered as a business, largely process excellence focused or operational excellence focused, really about controlling that and making sure that you can perform through rigor. And I use the word process and control deliberately. When we talk about leadership, we talk about something a bit different, which is less anchored in the here and now, more thinking about where are we going, future oriented, typically goals, ambitions, purpose driven, and thinking about what change is needed to get us there, empowering people, giving people autonomy to work within their skill set, within their experience, under direction, through inspiration, but really driving towards something that is again purpose driven, a reason, a meaning for being here, but less about the controls and processes of what we describe to be management. So it may be that you need to invest in management as well. We're feeling, as we peck our heads up and look up and out at the horizon, investing in leadership and the specific nature of leadership that's right for your business is a key feature of what businesses should be doing right now. As I say, not to the detriment of management, but I think management won't necessarily get you through 2021. So when we talk about leadership, what we often find is that people leap to leadership, what we would call leadership development. So, okay, leadership's important. How do I develop better leadership, either personally, as an individual, if I consider myself a leader, or for the wider organisation, the wider team? How to identify what development is needed is a bit of a journey. And in my experience, personally, what I've often seen is we accept the fact that leadership is important, and then we look for the solution that might come in the form of some kind of training program. Typically, we might say that name of a training provider is a good one. I've used them before. It might be a business school. It might be a specialist training provider in leadership skills. And we're sort of taken by the name. We're taken by the glitz of, this famous business school is offering a leadership development program. That's probably the best one out there. Therefore, we should spend our money on that. And it might be okay, and the experience certainly might be a good experience. But that famous business school is providing the type of leadership skills that your business needs. I'm not sure they know, and I'm not sure you know going into that conversation what it is your business needs. The other thing that I've noticed pre-COVID, I would say, in more kind of networking environments and conversations with sort of local business leaders, is this feeling that you've heard somebody else has been on some form of leadership development program. They thought it was good. And there seems to be this almost groupthink emerge where you sort of go, oh, well, I kind of respect them. They thought it was good. Perhaps I should try that. So it might be an unfamiliar name to you, but The reference of somebody who you respect is often a powerful driver to say, okay, that might solve my leadership needs as well. Again, I'm not sure that's the most effective way about developing leadership skills. And the other slightly more sort of self-deprecating approach I see a lot of business leaders take, looking in the mirror saying, well, I know I'm not very good at X, Y, and Z. Therefore, I really need to go and develop those things. So it's sort of slightly getting to a more detailed level of what I might need to develop. And this sense of sort of the learning needs analysis, if you like, being more about what you're not good at and improving those things, rather than the position we take, which is actually, let's start with what your business really needs. If you have an ambition, if you have a view about what your business is trying to achieve in the possibly only short term, hopefully medium, long term, then use that as the anchor to try and analyze specifically what leadership skills and behaviors are going to work for your business. And this idea of leadership needs analysis isn't a complex bureaucratic form-filling exercise. It's a way of really getting your focus zeroed in on the specific skills and behaviors for yourself, possibly throughout your team, that are going to align directly with helping you achieve your business goals. Seeing a headline, seeing something that's provided by a very reputable provider, hearing possibly colleagues have been on something and found success through it, reflecting on your own skills deficit, if you like, and trying to improve that, are all well-trodden paths, but very often result in developing skills that are necessary for your business. And whilst that might be sort of self-fulfilling in terms of rewarding just by going on some form of learning journey, it won't necessarily deliver you the return on the investment that hopefully you're looking for. So what we guide our clients through, and what I share with you today, is just four simple steps that we would typically take. As I say, I don't think it needs to be overly time consuming, but it does need to be a disciplined process of really laser focus, if you like, on what specific things are going to help you. And I think, again, one of the things I'd avoid is trying to sit down with a blank piece of paper and start writing out the type of leadership style or type of leadership skills that you think are important. Instead, start with a leadership framework. There are thousands, probably millions out there. You're probably all registered in some way as part of a professional network or membership body that are bound to have some form of leadership model as part of them. You might have your own company leadership framework. Whatever it is, it needs to be broad enough that you're not already giving yourselves the answer, if you like. You're not already letting bias creep in by saying, well, we've signed up to this leadership model, therefore these leadership skills or behaviors are the right ones for us. I think it needs to be broad enough that you can assess within leadership what's going to be most critical, and also a valid framework, one that's been subject to rigorous research and testing. I could be critical of leadership models. I think most frameworks and models serve a purpose, but I often use the example of communication. If your leadership framework has a skill within it that is called communication, communication for me covers a wide range of different things, and it's really hard, I think, for anybody I've met to focus on developing a skill of communication. I think typically within a business that communication banner needs to be broken down and really clarified. Do we mean talking, listening, writing, like very specific skills that are more or less relevant depending on your environment? So if you start with a valid research-based, broad enough framework, then you can start to conduct your analysis based on that and really, as I said earlier, crystallizing what you're trying to achieve and which of these skills and behaviors are most likely to align with that. Now, depending on the size of your business, depending on the complexity of your business, that might be an individual exercise. You may be able to sit down and say, okay, I've got this 30 skills and behaviors written down. I can start to think in the context of what we're trying to achieve, which ones are really going to be most important to steer my organisation forward. In my experience, that's helpful. It may well fall short if it's an isolated individual exercise, and by that, if it's done once, put in a drawer, never seen again, it may not have the impact. But also, if it's done on your own, you're likely to miss the different perspectives from around your business that I think are quite important to try to establish which leadership needs are most critical. I say here, invite input from all stakeholders. That doesn't mean your business is a democracy. It doesn't mean everybody gets an equal vote in saying, I think this leadership skill is the most important. But actually having a structured way of getting that insight and information from employees, members of your management team, members of your leadership team, peers, colleagues, advisors, people who know your business, possibly your customers or your clients, people who understand what you're about, may have a valid view on the specific leadership skills and behaviours that are going to be useful. And the final point then is to make sure you're being objective. It's very easy, again, if you conduct this as an individual sort of personal exercise, it's all too easy to sit there and project this onto yourself, or even if you include others in the process, it's too easy almost to just walk into this thinking, well, I kind of think we need these things because I know I've got these things. Or if you tend to be glass half empty, it must be these things because I know I don't have these things. Really need to keep it objective and a disciplined process. And again, that doesn't necessarily mean it needs to take a long period of time. It doesn't necessarily need to take a huge amount of time. But taking a step back away from personalizing it to you as a business leader or to your team is important to make sure you get the right outcome. And once you've got the right outcome, then you've got a basis on which you can say, okay, I'm confident these are the things from a leadership point of view that we can invest in that will actually have a material impact on how we move forward. And from our point of view, that return on investment goes from being, we spent £10,000 on somebody to go on a leadership program. We may or may not have seen that £10,000 back in return in terms of their performance or their impact on other people, their influence in driving organisational behaviour and achieving business goals. That investment's often questionable. It's a large chunk of money, and I don't know many businesses who take the time to track the return on that investment, and those that do don't often report successful findings. What we're talking about doing is perhaps narrowing down the field of the things that you're trying to develop, the capability set that you think you need to achieve your goals, and then really closely looking at how investing in those things has an impact both on the people in your organisation and your business overall. I'm not going to read through the list that's in front of you, but I think if I touch on what it means to have both effective and consistent leadership in organisations where people look to more than one person for guidance, direction and leadership in a general sense, making sure that each one of those people can be effective in the skills and behaviours that are important for your business, but also making sure that there is consistency across people who are performing leadership roles, so that if you're on the end of that, you're hearing similar messages based on the same principles, based on a consistent understanding of what is going to help the performance of your business, rather than effective leadership that's inconsistent across the group, or very consistent set of principles that just aren't effective because the people who are looking to lead us don't really know how to enact that, don't know how to deliver, if you like, impact through leadership. So from a people point of view, if you think about your organisation that you or others are trying to lead, it's helpful for people to be led effectively and consistently, so that they're able to carry out their role to the best of their ability. From your business point of view, obviously it makes sense to get a maximum return on the investment in leadership. Whether you're consciously investing in leadership or not, you typically, if you're running a business, are spending time in a leadership capacity. So I would encourage you to reflect on whether the amount of time you spend leading, consciously or unconsciously, is delivering you any return at the moment, and whether some incremental investment in that through your time or through your money, certainly through some focus, is going to actually give you a better return. Again, I imagine if you're not thinking about leadership, but you are in many ways performing leadership, you won't know whether you're getting a return on that investment or not. The forward-looking benefit as well for the business, once you've done this exercise, once you've really got confidence about the leadership skills and behaviours that are important for your business, you can then start to look forward. You say, well, not only can we think about our own now short-term, medium-term capabilities, but think about what are we looking for in future hires, or members of the team who we imagine might be leaders of this business in the future, do they have the types of skills and behaviours that we've established are important? And if not, can we start to develop those at an earlier stage so that when they are emerging to sort of take over leadership positions, or that doesn't always happen by design, that might happen accidentally, that again, they're aligned with the things that are going to drive your business forward. So we think that there is a clear present reason for wanting to invest not in leadership in a generalized sense, but in understanding the specific leadership needs of your business so that you can use that as a basis for making leadership effective now, and then having the platform to make sure it's going to be effective going forward. I think I've made the case for this being relevant. I'm not here necessarily to drain that too much. We also look, as Matt said earlier, at organisational structures, the way that, let's say, decision-making processes work, and various organisational processes within a business, as well as skills and capabilities. All of those areas of organisational effectiveness we consider to be important. We're just advocating that now, given the context we're all working in, the single most important thing to help steer your organisation forward is a rethink about leadership and a refocus on your leadership needs. I'm conscious that I've got Gordon following me, and he will want enough time to convey all of his messages as well, but I'm happy to take questions either now, or we can, I'm kind of half looking at Matt, we can park some time at the end to come back to this topic if that works better. I can't see the chat, so I don't know if anybody's got any questions for now.
Thanks, Matthew. There's nothing in the chat. However, I did, so if you wouldn't mind just unsharing your screen for a second. I did speak to a few people within our network on social media, a few questions they would like answering, if you wouldn't mind. First one being, who should determine what style of leadership is necessary for a business? I don't know.
What's the question?
Who should determine what style of leadership is necessary for a business?
Yeah, it's tricky, because I think in my mind, if you have somebody individually responsible for running a business, then the ultimate decision about what type of leadership is right for the business has to sit with them. They are accountable for everything involved. As I said earlier, I think you potentially end up with a very biased or subjective view on leadership if that's the only source of information. So I think there's a difference between opening up the conversation with a multiple range of stakeholders. So when we conduct this exercise for our clients, we would involve as many members of the management or leadership team as possible, and a sample grouping, if you like, of employees to get a representative view from them. But ultimately, we circle back with the person who is running the business and validate the findings with them. I don't think it's fair to expect anybody else to make the final decision about, these are the critical leadership skills and behaviours.
Good. And one last one, how often should a business leadership needs be reviewed?
I've mulled over this. I think I might have made reference to it in one of our previous articles as well. It's very hard to answer that. Certainly not every day, and definitely not every week. For me, the most obvious trigger around conducting a leadership needs analysis is there has been something significantly changed in your operating context. Now, I don't know a business in the UK today that hasn't been through some form of significant change in the last 6 months. So that's why I'm advocating right now, regardless of what kind of business you're running and whatever your circumstances, I suspect something has significantly changed, and I suspect now is a good time to rethink and analyse what those needs are. Going forward, I don't think it's a routinely exercise that you would do every couple of months. I suspect if you find yourself in your 12 to 18 month horizon, you've not thought about it again, you've not reflected on what those needs were, you might be drifting away from them being relevant. So for me, it's every time there's something that might significantly impact the direction of your business or the decisions you make within it, or at the latest in a 12 to 18 month kind of time horizon.
Cool.
That's okay.
Yep, Bristol. Thank you very much indeed, Matthew. Okay, so we're going to switch over now to Gordon Kearney of Fiducia Wealth. Gordon, if you want to take control of the screen, share your presentation, and the floor is yours, sir.
Just bear with. Can you hear me, guys?
Yeah.
Okay.
Yeah.
Guys, can you see my presentation? Yes?
Yeah.
Okay. Well, good morning, everybody. As Matt said, I'm Gordon Kearney, the Managing Director of Fiducia. I'd like to thank Blackmore Four for giving us the opportunity to speak today. And the interesting subject I've been given is, what has COVID-19 changed and where should I invest my money? Okay, health warning. Here at Fiducia, we have no crystal ball. We certainly don't have a time machine. However, we are very fortunate that we do have Michael Hughes. Michael is a stalwart of the city, having spent 35 years in significant posts, including Barings, JPM and Barclays. He's been with us for 12 years and he helps map out the economic framework here at Fiducia. So, void of a crystal ball or a time machine, he's our next best thing. So the question is, what has COVID-19 changed? And I think the answer to that is quite a lot and very little. Clearly, it's without precedent in terms of the impact it's had on us as a society, but also on the economy, and also the extent of government control in our everyday life. However, from an investment point of view, we see it that very little has really changed. There still remains the need for a good, well thought out strategy and plan. Within that, there still needs to be a strong, well thought out long-term economic and investment strategy. And within the heart of that, there needs to be diversification. Not particularly exciting, but it is the bulwark of good investment management. So if we touch on on investment diversification, what we see here is quite a common chart in investment management, but it demonstrates the top performing asset classes. This is a US version going back to 2006. So that's a good reference because we have obviously the crisis and the recent crisis of 2006, 7, 8, all the way to COVID-19. And it's a very colourful chart, but in essence, what it's showing is that it's virtually impossible year on year to pick the best performing asset class. You can see quite clearly that REITs, which is the top in sort of 2010, 11, 12, and then 14, 15, is also now the bottom performing asset class. So commercial property, while the darling of the sort of 10s to the 15, has quickly fallen out of favour. And equally, look at the one with markets. It's essentially, it becomes top, then bottom, top, then bottom. The point here is that diversification is about ascertaining that sort of middle line. So if you look at the white box, which is an asset blend between various 7 asset classes in the chart, you can see it's not exciting, it's middle of the road, but it produces a degree of predictability that you can't get from trying to pick winners of the future. So the first message is that asset allocation is as valid today and diversification as it was pre-crisis. But if I take a look at specifically Fiducia's forward-looking investment strategy, and to ascertain what has COVID really changed in terms of the way that we view the world. Now, pre-crisis, our model portfolios, in conjunction with Michael's insight, really looked at these 7 key themes and said, well, we want to build a portfolio for what the world's going to look like, not necessarily what it has looked like. And if I look at COVID through these themes, and I can see that really it's fast forwarded certain trends, but specifically these 3, which I'll go into one by one. So it's the debt growth trade-off and what that means for inflation, the demographic trends that we're seeing and what the impact that has on technology and healthcare spend, and the significance of global emerging markets, but more specifically the rise of Asia. So the point I'd like to stress here is these were existing themes that we had. So if we look at it to say, well, what are these themes and then how has COVID impacted them? Well, it's quite clear to us that in the West we have a debt overhang. And the only way, well, there's 3 ways you can get out of sort of debt in terms of government debt. And the first one is economic growth. But as you can see from the chart on the right, this is a McKinsey study looking at average rates of global GDP growth. So the 1950s to the 14s were a golden period. pre-COVID, the period from 14 to 64, that sort of 50-year period, returns were projected to come down as the Western world slowed, and unfortunately the developing world couldn't pick up the slack. So it was quite clear to us pre-COVID on a 10-year view that we've got debt and we're not going to grow out of it anytime soon. So the next question is, well, what else can you do? Well, you can default. And this is what Argentina has been doing perennially for the best part of a couple of decades now. But to the Western world, that's undesirable. It's just not palatable that someone like, you know, is in the Eurozone or indeed the UK. So we identified that on a 10-year horizon that inflation was the only way that the government debt and the overhang on the West was going to be eroded. And hence we modelled our portfolios accordingly. So if we look at what has COVID done, well, it's self-evident from looking at the papers and the projections that there's been a huge hit to GDP. I mean, the baseline at the moment is for 5.2% contraction of global GDP. Essentially, it's going to be the deepest recession we've had in decades. So if we weren't going to get out of it with growth before, we're not going to get out of it with growth post-COVID. So that leads us to inflation. And there are a number of inflationary points that really add up to the previous point about how we're going to get out of it and the long-term view. And one of them is that if COVID's taught us anything, is that we have to assess our dependence on China. You know, is China a reliable partner? I think the question to that is no, or the answer to the question more of is no. And therefore, what we're going to see, and we've already seen evidence of this, is shortening of supply lines. You know, countries and companies are onshoring where practical or indeed cost effective, or indeed they're moving to less politically volatile countries than China, for example, Vietnam. The net result of this is that labour costs are more expensive, and therefore that ultimate cost is going to be put onto the consumer. So if we look at the role of China and pre-crisis, we had obviously the rise of protectionism, which is really calling into question you know, globalization as we've come to knowing and enjoy it. And I think it's evident to say that COVID-19 has really heightened the sensitivities around our dependence on China and indeed globalization. And globalization has had a huge deflationary impact over the last two to 3 decades on the world. And I think that's now being assessed, which in itself, I believe, will be an inflationary pressure. We're going to see tax increases. Initially, we've not seen any tax increases. The obvious reductions were in VAT to help with the hospitality sector, but eventually they will revert to the norm, and simple baseline effect of tax increases in the future will lead to inflation. There will be more indirect tax increases because ultimately the burden of debt that we've accumulated has to be paid for. As an aside, the government in the UK is forging ahead with its digital tax on the likes of Google and Amazon, but these companies have essentially said we're going to pass that on to the consumer. So there are, you know, in addition to COVID, there are other stresses that are causing inflation. Cheap lending and government schemes, stamp duty, help to buy, they're all serving to inflate the property market and all the ancillary services that come off that. Where will that end? I truly don't know, but I think at the moment it's quite evident that it's inflationary. We've had more quantitative easing. Essentially, the government's looking to reflate the economy, but essentially, again, that is a sort of stimulation of inflation. And if we add into that the B word, Brexit, we're either going to have a skinny deal or indeed a hard Brexit. But either way, there's going to be tariffs in both of these scenarios, and tariffs by their very nature are inflationary. So we view that inflation is on its way, but the question is, on recessions deflationary? And it seems silly to say that inflation is on its way when you've got all of these structural headwinds. But I'd like to encourage you to think of it like the Nike logo. And what I mean by that is if you consider the tick you have today and 12 to 24 months, in the short term, you're going to have greater unemployment, suppressed demand, lower business and consumer spending, and tax cuts. However, over time, whether or not it's 24 or 36 months, you're going to have all those aforementioned points come into play, which are going to push up inflation. So I think we need to prepare our portfolios and have a view on inflation coming into the system. And from within that, there will be some beneficiaries, property, albeit a huge question mark over commercial property as it stands in London, etc., and retail. But traditionally, real assets do well when there's inflation. So things like infrastructure, commodities, particularly gold. If I move on to another of our pre-COVID-19 10-year views and themes, and that was really the demographic trends that as China's getting older, as the West is getting older, there's certain parts of the world and the US to a lesser extent that will benefit or will need, moreover, greater expenditure on healthcare. We have some other working assumptions there, but specifically for today, I'd like to focus on the expenditure on healthcare and indeed technology. The two essentially are intertwined and will need to be to service the amount of the populace that is getting old. So pre-COVID, to us, this was clearly a theme that we wanted to have exposure to. You know, how has COVID impacted this theme? Well, I think it's evident to say that, you know, COVID-19 has been a wake-up call. The realization that the economic costs of the pandemic can be huge, far suppressing investment in research and prevention. The reality is we will now, as a planet and as particularly as the Western world, we're going to spend billions on research, vaccines, therapeutics, and non-medical methods of prevention. Essentially, populations will now put a premium on healthcare. We all now appreciate more so than before and value our healthcare. And that will lead to greater government spend per capita, which will be publicly and politically acceptable. So we see a real boom, and to use a deliberate pun, healthcare will be put on steroids as an investment asset class. But it's not just healthcare, it's technology. You know, 10 years in 10 weeks, you know, from Zoom to Netflix, to online shopping, to the way that we operate in the office, from DocuSign to the Teams which we're using today, to cashless payments. You know, COVID-19 has essentially put a fast forward button on technologies that we would have adopted when we were ready. So the result of that short, crazy period of technology embedded itself in our lives was that tech companies, unlike 1999 and 2000, they've got solid earnings, and in some instances, huge earnings. Some of them are quasi-utilities, if you think of Google and Amazon, and essentially they've been embedded into our lives. However, while we believe that technology is a key theme and a driver of markets going forward, I would exercise a degree of caution. Valuations are extremely high. This may be valid in the likes of the quasi-utilities, but not all stocks are utilities. So if you look at something like Spotify, it's got a high price to earnings, and it's got huge challenges from the likes of Google and Apple, which will, I believe, erode at its market share and ultimately depress the valuation from what appears to be an excessive high. Likewise, Netflix. Netflix was the lead, if you will, in terms of embedding itself in our houses during the lockdown, but it's got some huge challenges. On a price to earnings of nearly 80, it's got the likes of Disney and Comcast, which are snapping at its heels for that market share. And also, we mustn't forget that political sentiment towards Silicon Valley can change. So our message here is that while we believe that technology is a key theme for the future, you need to be careful, don't get carried away, diversify, be proportionate in your allocations. And ideally, what you want to be looking for is the net set of FANGs. That's where the returns will be, not necessarily in the monoliths that we see in the likes of Google and Amazon. The final theme I'd like to look at today is the rise of Asia, but also generally globally emerging markets in general. So again, carrying on my theme, what we've got here is our pre-COVID theme. And if you look at the right, this is the essentially the top 500 companies, or the Fortune 500 as they're dubbed. And these were projections pre-crisis. So you're looking at a slow and steady increase up until sort of the 20s, until 2025, of Chinese companies being populous in that bar chart. And you can see that essentially, so roughly about 45% they're making, 46% that they're projected to make up. So again, key theme, we saw it developing, and I think this is also reiterated if you look on the left. Again, it's a McKinsey study, but it really shows essentially where the economic output and the significance in terms of cities will be projected in sort of 2025 and beyond. If you look at the transparent ones, you see essentially these were significant cities in 2007, which won't make it to 2025 in terms of its GDP, its economic output. And it's quite clear to me, looking at that chart, that there is a proliferation in Europe of has-been cities, for want of a better phrase. Some cities will remain significant, which is essentially your orange ones. But what's most striking is the blue ones, and that is the proliferation of new significant emerging market cities, predominantly along the eastern seaboard of China, but into Asia as well. So you know, it's not a new story. Asia was rising. It was you know, it's got a lot of demographics in its favour. It's got the GDP. It's got the momentum. So it was a theme that we had within our portfolios on a long term and a tactical play. But you know, COVID. So how's COVID impacted this theme? Well, if you look at the GDP year on year of the top performing nations, and indeed the worst performing nations, what you see quite clearly is the likes of Bangladesh, China, Pakistan, Vietnam, Taiwan, and South Korea. These were, you know, some of the first nations into the pandemic, and they're clearly, from an economic growth point of view, going to be the first out of it. The converse of that is if you look on the worst performing economies, notwithstanding India, which obviously has a huge issue with COVID in itself, you see the United Kingdom, Spain, France, Italy, and down at the bottom, the Euro area as a whole, as really struggling on a GDP year-on-year basis. So to us, COVID has accentuated or fast-forwarded the trend or the theme that was emerging Asia, which essentially means that they're going to catch up the West quicker. And in terms of global significance, Asia will be a key driver of economic growth going forward. As you can see, the beneficiaries. So it's not all about the putting all your investments in emerging Asia. There are other ways that you can play this by Western consumer brands, indeed infrastructure and commodities. So in summary / conclusion, COVID-19 has changed a lot in our world, but it hasn't changed the need to have a plan, to have a long-term investment strategy that looks at where returns are going to be, not necessarily where they have been from, but you still need to diversify to protect portfolios from the ravages of ups and downs. And in addition, there are some clear winners within investment strategies, but you have to be minded of inflation. You have to allocate potentially to healthcare and technology, albeit with the caveat of being proportionate and not get carried away. and also looking at the significance of Asia and how you can play that within your portfolio. Hopefully that's given you an insight as to how we look at our portfolios here at Fiducia. I'm open to any questions if anybody has any. Apologies if I may have gone a bit.
There is a question that's come in, Gordon, from Gary, asking, what's your view in investing in overseas assets when the pound is so weak?
That's a very good question. Our view has always been not to try to get involved overly in currency on the basis that in time it washes its face. You know, currencies are multifaceted. You know, we've got exposure to Asia. Try to control currency as a whole is, in our opinion, is just too difficult. It's a case of accepting that you'll gain on one and you'll lose on the other. Trying to be clever on currency is not something that we try to do.
Okay, well, I hope that's covered that off for Gary. By all means, obviously, you can get in touch directly with Gordon, Gary, if not. One thing that I had, Gordon, if you wouldn't mind, you made a really valid point about PE ratios in the technology sector. I noticed Amazon have got PE pushing onto 20 or so. I'm not going to ask you to stick your neck above the parapet and start stock picking and stuff like that. But with regards to diversification, what's your view on using ETFs for that purpose?
Okay, I mean, it's a really good question, and if I may, it leads me into one of my other points that I made about trying to find the fangs of the future. And one of the stocks plays that we have in the portfolio is an ETF, which is specifically designed. It's called the Cloud Computing ETF, and it's deliberately designed to capture the stocks of tomorrow. So as we know, you know, the Amazon or the FANGs get all of the headlines. But there's a real ecosystem that sits below them, and it's the fangs of the future. You know, anything that leverage itself to technology. So it could be DocuSign, Shopify, Zoom. Indeed, was one of the darling stocks of that particular ETF. So yes, I think ETFs have got a very useful place to play, particularly in some of these tech plays that I mentioned. And we're very fortunate to have identified this particular one, which plays into our theme of, you know, tech is not just the fangs, it's the bit that sits below that and the ecosystem they're in.
Cool. Okay, that makes a lot of sense. Gary's coming forward again, asking questions about when do you forecast the resumption of dividends by companies who have pulled or reduced them?
Again, it's another good question. I go back to my aforementioned time machine and crystal ball. I think there's a lot of appetite on companies to want to do that. But I think once my view is essentially sort of in mid 2021, once we get a visibility post-crisis, potentially a vaccine, potentially better testing, and companies can reassess, you know, balance sheets. Going into this, you know, a lot UK PLC, whether or not it was to do with Brexit or not, they were quite strong balance sheets. So we're in a relatively okay position. The UK has historically always been a dividend paying market, and I don't think it's going to want to give that up anytime soon. So I think there's a lot of goodwill and intent to start paying dividends, but I think we just need to get a bit more clarity on you know, COVID and testing, and beyond that, a potential vaccine. But if I was a betting man, I would say that there would be impotence to do it in sort of mid 2021.
I suppose just adding weight onto that, obviously a large makeup of our large companies in the FTSE 100, for example, heavily denominated on US dollar. So currency markets and so forth are going to play a part on those decisions as well.
Yeah, I think that the interesting point there is, just to go on a bit of a segue, is Brexit. And our sort of assumption, and we have to have a base case assumption, is that if indeed we get a hard Brexit, then sterling will take the strain, more so than what it has. And you're quite right. Then when you look at 75% of the FTSE earnings are, you know, either euro or dollar denominated, the repatriation of them will be a good thing for the large FTSE international players who can potentially pay dividends. Converse of that is if the politicians get their act together and we get a deal, then you could see potentially, sterling rally somewhat, and then that would be good for the mid and small cap. So it's too early to tell, but you're quite right. The fate of dividends is to an extent intertwined with Brexit.
Good. Okay. Well, thanks very much for that, Gordon. I think we've finished now really in terms of our presentations, so it's time to move on to the outro. So thanks very much again to Gordon and to Matthew. Thoroughly enjoyed hearing you both speak. I hope anybody watching this found the information very useful. If you do need any questions answered, please be sure to get in contact. As I mentioned at the beginning of this, we will send you copies of the slides from both presentations, and hopefully you'll find those a bit useful, should I say, to jog your memory on anything. I'd like to thank you for all coming along. Obviously, please look out for any future events from both companies, Blackmore Four and Fiducia Wealth. One last thing from myself. We do have an event coming up at the end of October where we at Blackmore Four will be looking at leadership assessments in more detail. So keep a look out for that. One last thing from me, please remember to social distance where possible. Keep following the government guidelines in your approach to COVID-19, and most importantly, stay safe, stay vigilant, and think about where you're investing personally as a business in the future. Thank you for joining us, and speak to you all soon.